Mr. Srinivasan, what an absolute pleasure it is to have you join us here this evening. A side story, just before we were walking in, he said, look, don't ask me boring questions, let's have some fun. So your wish is my command, Mr. Srinivasan, so I'm going to start by asking you, do you believe the RBI should have a say in capping CEO tenures?
I can actually say it. I have only 25 days left, right? So, I see, if their belief is that a long-serving CEO may be up to mischief, I can't argue about that. That's the perception. But I would like to have continued for a few more years. That I can say. Yeah.
So not ready to hang up your boots just yet.
Far from that.
Far from it. So let's talk about, if you had another 14 years at Federal Bank, what the Federal Bank story could potentially look like, and what the Indian banking story could look like. I remember you said once that you gave an analogy of comparing Ayurveda and Federal Bank. You said what Ayurveda did for Kerala, Federal Bank has done as far as Kerala is also concerned. You've taken it out of Kerala, you've given it to the nation. And I want to understand from you, over the last 14 years, the complexion of the bank has changed. There has been a diversification as far as your deposits are concerned. What's been the most heartening as well as the most challenging aspect of that journey?
Challenging one is answering questions like the ones that you asked. The heartening one, I'll tell you, Shereen, the fact that when Shruti introduced Federal Bank and pointed to the fact that we are a prominent player in the banking space today, we are literally knocking on the doors of being the top 5 private sector banks. Right? I heard when SBI chairman was speaking, thank you, when SBI chairman was speaking and the introduction was, it was a 60 lakh crore bank, right? Today we are 1/12th of SBI. When I took over, we were 1/20th of SBI. So the fact that rate of growth of Federal is much higher than the industry is in some sense heartening, because today we are, I always say, right, you're either on the table or on the menu. I think we're slowly getting into the table. So hopefully we are not the menu, and I'm getting, so that's what I would say. Yeah.
Well, you're talking about this scorching pace of growth under your tenure. What do you believe has aided the kind of diversification that you've seen, also the pace of growth you've been able to deliver on? What would you classify as the 3 or 4 things that you did differently that have helped you achieve this?
I have no personal credit. In fact, tomorrow is our AGM. I was just writing my speech for our shareholders.
So give us a sneak peek of what you're going to say.
I will share. It's not, just statistics, right? Our business has grown 7-fold, and our profits have grown 7-fold, and our market cap and net worth have all grown 6-fold. So numerically, we have done well, and you can't argue, it's a fact. But I think what we take great credit is, we unlock the belief that people, ordinary people coming together, can do fantastic stuff. And I take extreme pride, and I hope that's the mantra that we will leave behind. We have no point claiming any victory. In fact, my personal philosophy is we are happily dissatisfied. And we're happy, but always dissatisfied. And I think it's a good place to be in. I do believe that's the bank's philosophy too. I think everybody genuinely believes we can be on the table. And therefore, there's a lot of effort, there's restlessness, there's an ambition to do good stuff. And so if there's one thing we've accomplished over the years as a bank, I would like to believe it's about a genuine belief that a bunch of ordinary people can come together and do good stuff. And I think that's happening.
Well, that does deserve a big round of applause. And yes, I do believe that magic happens when there is alignment of vision and alignment of execution as well. But, let's talk about the next 4 years, because the aspiration for you has always been to try and double the bank in 4 years. And do you believe you're on course to being able to achieve that?
It's 4 or more plus in that zone. See, if you grow 18% a year, then you will naturally, double anything in 4 years' time, right? So that is very possible. Yeah, there are near-term headwinds. If the economy and the deposit challenges prevail, you may slightly dial down to 16 and then you'll catch up. But I think 4.5 years, doubling the bank is very possible, as we have. I mentioned the numbers to you just now. We have, I think, a CAGR of 15% over a 14-year period. There are only 2 other banks that have done that over this extended period of time. And I think our platform is, in a good space right now. Ability to grow the 16, 18, 20, depending on the environment. I do believe it's possible, yes.
You know, not just the federal story, but the Indian banking story in general. I'm going to pick up something that you said. We've gone through a phase of recovery, revival, and now you believe that for the bank, it's a phase of thrival. What does thrival classify? How would you broaden that, color that out for us? What does thrival mean for federal as well as for the Indian banking sector?
See, I think the word thrival is a play on the thrive and revival thing. But I do believe if a system which is growing well, somebody has to outpace and score extra share, it's not just one thing you do better. The whole platform and the performance level across the spectrum has to be many notches above. Right? And if federal, I do believe it's our time, can make sure that we don't, the drumbeat continues and we just don't miss a step, then the thrival theme is possible. And I think if a system is growing at 14, 15, many of our senior colleagues just spoke, over the next 4-5 years, they visualize a 15% growth. And if we are growing 18, 20, we are truly thriving. There are a few fundamental things I do believe all of us have to recalibrate. This fixation about margin. No, I'll tell you, and if you have the time, I will.
Yes, of course we do. Please do.
See, I think when the measure of margin was okay in another era, I think what everybody should recalibrate is not about margin, it's incremental interest income growth or growth. Ultimately, an institution has delivered profitability, right? High quality, credible profitability. So if the margins, very often the analyst community, oh, this margin is lower than somebody else, but please correlate it with credit costs. Please correlate it with other surround numbers you make. And then look at the returns an organization is providing. You will find that the outcomes are a lot more sustainable. I keep obsessing about Rahul Dravid, right? And I think banking has to be like that. It has to be boring, consistent, predictable, real, all the time. The drumbeat cannot go away. And in that context, this fixation about one parameter because it served another era is probably flawed.
So what serves this era? If you believe that margin served a previous era, what will serve this era as a metric?
3 things in my view. One is genuine, true improvement in productivity across the spectrum, because there's a huge amount of, and it'll perforce be required because banks don't have the luxury of space in margin. So one is efficiency has to go up materially. Second is this lip service to my credit is better than somebody else. It has to show in credit numbers. Right? If credit quality is genuinely better, if credit costs are 20, 30 basis points versus 60, 80, 90 basis points, your story changes. And the third is if 1 and 2 works, efficiency and credit costs work, you will ensure the profitability is in place. So I do think the narrative will change from pure margin fixation to growth in income, and most importantly, your credit costs are at least in the sub 30, 40 basis points if you are truly a well-run credit franchise. We are at 27.
Even as you hope that we move away from this maniacal obsession with margins and move to the metrics that you spoke of, but in the interim, let me ask what Lata was asking the other bankers that we just spoke to. What is the expectation then as far as margins are concerned, given where we see both the cost of funds as well as the chase for deposits?
So in the near term, even the best of banks which have enjoyed high 3 or early 4 will see some compression, right? 20, 30 basis points. But if they back it up, and I do think some of the better players will, with good credit costs. See, the best banks which have margins that are around 4% have credit costs of 80, 90 basis points. So if the margin comes down to 350 and their credit cost drops to by another 25 basis points, they will match up and the profitability will sustain. So I think between 20 odd basis points, you could visualize a drop in margin. Not like a precipitous fall on day 0, but it could slide there if this war between deposits and credit growth sustains for longer periods of time.
You know, since we're talking about the future of banking and transformation, I remember that one of the first tasks that you undertook when you took over 14 years ago was to go in for an aggressive bank branch expansion. What was it, 600 branches that you opened? But then you decided to change course and you believe that it is bank light but distribution heavy. As we look at this new era of banking, what will the model be? What should the model be? What would be appropriate?
We slightly flipped that right. We had BLDH, branch light, distribution heavy. We made it light branch, heavy distribution. As in, the branch becomes much smaller, but put more people who cover the catchment. So distribution, so if you had 100 branches, like many of them said, you may not do it as 2,000-3,000 square feet. It'll probably be 500, 600 square feet, which just has a vault and a couple of people. But they have more people housed there to cover the local catchment. So I think my view is LBDH, light branch, heavy distribution, versus BLDH, branch light, heavy distribution heavy. It's shifting to light branch, heavy distribution.
Mr. Srinivasan, many, many thanks for joining us here. It's been an absolute pleasure. Appreciate your time. One final question. What next, by the way?
I'll tell you when I know.
Some hint. Whoa, any thoughts?
Nobody wants me, Shereen. I'm like, Buddha ho gaya.
No, not at all, sir. Not at all. Age is just a number. We wish you the very best of luck. Thank you very, very much. Ladies and gentlemen, a big round of applause for Shyam Srinivasan.